But on the other hand, you know, and I say this oftentimes, inflation is a vector, and what I mean is you got to use multi-dimensional arrays and linear algebra to even start n-dimensional linear algebra to even start to deal with the issue. Another way to say it is you can calculate a different inflation rate for any person in any jurisdiction based upon their mix of products, services, and assets they want to acquire. And so common sense says a person that wants to acquire a set of manufactured goods and wants to watch streaming YouTube has a lower inflation rate than someone that wants to buy Picassos. Now, what if you want to be rich? If you want to be rich, your inflation rate is very high because you have to acquire assets. If you want to be middle class, your inflation rate is different. So back to why I did what I did. If you're the CEO of a publicly traded company, your inflation rate is the cost of capital. And the cost of because your shareholders hold you to that cost of capital. If I go to a public investor and I tell them my goal is 2%, and they're saying, well, the S&P is up 14%, then I'm undershooting their goal. Their index is the S&P index, right?
Correct.
So the inflation rate for an investor is the index. Now, of course, different investors have different indexes. If you go back to the strategy, if you're a fixed income investor, you've got like a sovereign, or corporate fixed income rate. You've got the junk bond index, you've got the corporate, investment grade index, you've got the sovereign debt index. You have capital structures in the world that have different indexes. Someone that wants to send their kids to an Ivy League school and wants to have a house in the Hamptons, right? They have a different index. Someone that wants to be obscenely wealthy has a different index, right? So that's why you could have everybody talking past each other, because and of course, if you keep changing the indexes, the S&P 500 index changes, right? They rebalance it. The PCI, the PCE indexes, they get rebalanced. So the indexes are changing. And if you allow someone else to feed you the index they want you to focus on, well, you can see it right now, right? The official inflation rate in Canada is 4%, but the housing price is up 15%. The official inflation rate in the U.S. is 5%, but the Case-Shiller index is up 27%.
Something big.
Okay, and of course, it all comes down to deciding what you want in life. Now, in the last 12 months, the S&P is up 34%. If you're sitting on $100 billion worth of cash and you put it in the S&P index, you got $34 billion back. You have $134 billion right now. If you held it in conventional treasuries, you're short $34 billion. If you convince yourself that the inflation rate was 5%, or if you convince yourself that you could say, look, my treasury index is just the short-dated sovereign debt index. And so as long as I'm beating the 20 basis points, I'm good. And by the way, like if I have a bunch of money sitting in a bank, my bankers come to me. I've literally had bankers from the big wire houses. They came to me when I'm sitting on 100 million or 200 million in cash, and they go, we can get you into one of our money market funds that'll yield 22 basis points, and that's much better than the 9 basis points. And they're selling this to me. There are people in suits that make a lot of money, and they're selling it to me. And you read the prospectus, and the prospectus is they're going to do something, and they're going to charge you a 27 basis point fee to generate 22 basis point yield to you. You're literally...
They're making more money than you are.
You're giving 60% of the yield to someone in a suit that's giving you a service to get you 5 basis points more. But there are people that convince themselves that this is a good idea, right? And we come back to that in a second. It's an important truism in the market. Why is it that everybody hasn't bought Bitcoin? People ask that, right? All the Bitcoiners wonder, why don't all these investors buy Bitcoin? And the answer is because there's trillions of dollars of capital locked up in capital structures that are chasing a different index.